Welcome back to On the Brink. This is Ria from Castle Island Ventures. In this episode, we sit down with Pat Larsen, co founder and CEO of ZenLedger, to talk about everyone's favorite topic, crypto taxes. We cover everything from the state of crypto taxes in the US today. What are Pat's specific thoughts on how crypto tax rules could be improved? And the specifics of how certain types of transactions and entities in the space are taxed. This is an important and timely episode, so let's turn it to our conversation. Hi, everyone. Welcome back to On the Brink. This is Ria from Castle Island Ventures, and I'm joined today by Pat Larsen, who is the co-founder and CEO of crypto tax platform ZenLedger. And Pat, I think this is your second time on the show, so welcome back.
Thanks, Ria. I appreciate it.
So before we dig into crypto taxes, could you give us a refresher on yourself and on ZenLedger, and maybe talk about how ZenLedger has evolved since you were last on the show?
Yeah, sure thing. So grew up in Southern California. Half Vietnamese. Grew up next to Little Saigon there. Went to the Air Force Academy for undergrad. Studied chemistry there. Was in the Navy as a search and rescue helicopter pilot with a couple of combat tours. Got out, got my MBA at U.S. Chicago. Was in M&A iBanking for a bit, and then have been in fintech and crypto for the last 10 years. Ran a business unit at Amazon and co-founded ZenLedger in 2017. We started it as a TurboTax for cryptocurrency company. We kind of looked around, saw the IRS was suing Coinbase, saw that ICOs were going crazy, and the thesis was, hey, billions of dollars are going to flow into companies here. VC capital is going to flow in here, and that's going to kick off millions of people getting into crypto and the whole asset class going bonkers. So we looked at existing tax tools and kind of saw huge gaps in the market. Every smart person we talked to didn't tell us to, build a decentralized, sentient AI in the cloud on a slow database. They told us, like, I'm having trouble figuring out my taxes. My accountant and my lawyer can't figure it out, and I can't figure it out, even when it was a very savvy person. So we kind of figured, hey, get it right first and foremost. And to do that, you're going to have to ingest transactions from everywhere from day one, on chain, off chain, allow for auditing, allow for accountants to come in, API, CSV, whatever to upload, and then clean it up and output it to useful reports. And so, and have great customer service UI UX. And from there, over the last 4.5 years, we've raised 4 rounds of capital, about 12.5 million in total. We'll hopefully be closing on another round pretty soon. So happy to announce that. And we've kind of morphed into a data company and have products that help government investigators chase down money laundering and human trafficking and tax evasion. Enterprise, helping them with corporate accounting. We help a $100 million DeFi fund out of Valkyrie, among others, and help lots of individuals and accountants with individual tax filings, from big 4 accounting firms and their ultra high practice, down to token founders and whales, and down to individuals who are just on a couple exchanges and just have like a MetaMask wallet.
That's awesome. You answered one of my next questions, which was going to be, how has the end user base that ZenLedger is serving changed over the course of running the business? So, maybe talk about how it's changed. Maybe initially when you started, who was the key stakeholder, and is that different now?
It's stayed the same the entire time, because an individual who's jumping around to a bunch of different places, on chain, off chain, Korea, US, Bitcoin, ARB, ohm clone chasing, NFT minting, NFT trading, DeFi, like all that. Those are incredibly complex use cases, and that forces us to be really smart about bringing in on-chain stuff and then mirroring it to on-chain, off-chain stuff, and then being able to clean it up and report it, and do LIFO, FIFO, tax loss harvesting, full audit reports, all of that for the individual. And that robustness of what we give the individual, what they need from if you have a couple $1,000s in crypto net worth to tens of millions of dollars in crypto net worth, it's the same. So the software is going to work for you regardless. Just like in Excel, you can add 1 plus 1, or you can add 10 billion plus 10 billion. The software has to be able to handle both. Our software has to do the same, and so it just happens that our individuals can be very simple or they can be extremely complex. And the very complex individuals actually surpass the complexity of corporate accounting. Generally, corporations are not trading in out every day. They're holding stuff in cold storage, or they're operating solely on their own chain. And then they generally know what they're doing. But we can just hop in Slack and talk to their CFO and their core dev team and figure out a little bit more of the ins and outs on that specific chain. And then we surface those learnings to the individuals too. So if you love AVAX or Phantom or Ethereum or Solana, like we've talked to like dev teams in all these areas and got smart on all of them. And generally you're on all 4 or 5 or 6 EVMs. You're not on just one or two. So you kind of need to be able to handle all of them or none. So we've gone with the perspective of, hey, we need to be very broad, but also like incredibly thorough and rigorous in our integrations with each one, because you have to get it right from day one and across everything to get your taxes right today. And it's taxes are just kind of an all or nothing proposition.
Got it. And so you mentioned, an individual can either be have pretty straightforward transactions, or you could be dealing with someone who has more complex transactions to report. Is that all automated by ZenLedger software, or is there, for certain clients, do you provide kind of more hands-on, a customized experience?
Yeah. So if you want to, we'll marry you with a CPA and their firm with a bunch of legal and accounting experts there, and they'll do the all in, like all done for you type stuff, where you have an accountant looking at and cleaning up everything, getting it ready for you. Those cost thousands of dollars per year. Um, Otherwise, if you want to do it as an individual and just do it yourself with no outside help, then the difficulty of crypto is the kludginess of it. We build in security, we build in 2FA, we build in encryption. And that means that no software can just go in and read all of your transactions and clean it up very quickly for you. Even TurboTax needs you to input your W-2 and your 1099B and what you paid in student loans this year, and that stuff's like much more simple than all the cryptocurrency investments that most people do. So we never have your 2FA. We never have the ability to create APIs or download CSVs from you. So we work with you to help you go over to Bittrex and request from customer service their deposit and withdrawal files, or create your API at Binance and Binance US, or Coinbase and Coinbase Pro, and those types of things. We kind of walk you through all that kludginess of Web3, where it's your keys and your crypto, but therefore you have to input everything, or at least allow read-only access to centralized exchanges and APIs. Because we don't assume that when we see a MetaMask that you've uploaded, that the next MetaMask next to it or something is also in your possession. So you have to go through and tell us every single wallet that's in your possession. And sometimes someone will just forget, like, oh, I had a Solana wallet. I did like 20 transactions on it 2 years ago. Totally forgot about it. But now in ZenLedger, I see that there's a gap of these like Solana transactions, and that reminded me to go get that receiving address and put it into ZenLedger. So we do have AI and algorithms that will point out these holes that will remind you, of some of the gaps that are very hard to keep track of over 3 or 4 years of trading.
One thing you hinted at as you were naming some of those exchanges is the fact that crypto infrastructure is still pretty fragmented across both centralized exchanges and decentralized platforms. So I assume ZenLedger is laser focused on integrations with some of these platforms and aggregators to provide end users with, the richest, most comprehensive experience. Could you talk about some of those integrations and maybe which integrations have been the most challenging?
Yeah, I mean, I'd say that the integrations will just what makes it challenging is if the centralized exchange keeps changing things and keeps breaking the integration, and you have to fix it or wait. So the exchanges that are constantly changing things make it more difficult. The blockchains generally do not change things. That's the nice thing. They try to get right the first time and ship it, and then it's there. You may have uh, some deterioration in the blockchain, but most of these projects are pretty well funded, and there's like really smart people working them with good documentation. So we haven't really found like, oh, one blockchain is much harder than the other. Obviously, blockchains that are not kind of Bitcoin clones or Ethereum clones are more difficult, but you can figure them out, especially when we reach out. Algorand via Borderless Capital invested in our last round, and there are a couple blockchains represented in our next round, so that's going to help us as well get these integrations really solid. So I think we have like a really good dev team that has a lot of experience doing this stuff, and so it's kind of like it is basically what we do. One of the outputs of all these integrations is taxes for the individual. But like when you're bringing in tons of transactions, cleaning them up and reporting them out, it's pretty flexible. We can help with portfolio tracking, investment management, audit, investigation, reporting, taxes, accounting. Like it's pretty broad because basically everything's kind of happening. Like the whole economy of crypto is happening in either centralized exchanges, off chain or on chain, and like we're trying to look at all of it.
Could you, just taking a step back, refresh us on the state of crypto taxes in the US today? How is crypto classified by the IRS? And maybe touch upon any notable changes or clarifications in the way digital assets are taxed since you were last here.
Yeah, I mean, unfortunately, there's not a lot of clarification, and the state of crypto taxation is pretty gray. So we've had some guidance from the IRS from 2014. They've given a couple updates since then. In 2018, there was a small mention in the tax bill that 1031 exchanges are only allowed for real estate, therefore not allowed for crypto. President Biden just had an executive order that said, "Hey, let's research crypto more." And then the Build Back Better plan had all sorts of crypto stuff, but it hasn't passed into law. And then a lot of the things in the Build Back Better bill were rulings and judgments that Treasury Department would have to make going forward, and those would have been lobbied against or litigated against or amended by further laws. So we're still pretty early on. There's no comprehensive tax plan there. Cryptocurrency is tracked as if it were property. In practice, it's used as if it was a tech stock for speculative investment or kind of a medium exchange, maybe cash or some other kind of commodity precious metal. It's kind of used in many different ways. So you can kind of be conservative or aggressive in your tax treatment. Just be ready to justify it, be ready to end up in tax court and fight over how staking should be categorized, things like that, which happened in a recent case. So we're just very early on. I don't think any countries in the world really have like a really great idea of how to tax it, but some countries are a little bit more um, lenient and they say, hey, our country will be a sandbox and there'll be de minimis and we're not going to worry about it for right now because there's just not enough capital and economic activity happening. Whereas in the United States now, the difficulty is that every Fortune 50 company has blockchain and crypto designs. Every bank wants to do stuff there. Every tech company wants to do stuff there. Every payments company. And so that's a lot of lobbying heft and lawmaking heft and revenue and profit generation heft in the Fortune 50. And so I would be surprised if in a year or two we didn't have a lot more clarity because these big companies need the legislative cover to really deploy capital and make long-term investments in the space. And last time I checked, Fortune 50 companies usually get the laws and regulation they want.
And do you personally kind of agree with the way that digital assets are taxed today? Do you think it makes sense in the US specifically? And if not, I guess what would you want to see change?
Yeah, I mean, I'm not someone who thinks there should be no taxes. I think that's childish. I like the infrastructure that we enjoy. So, um, I don't think there's anything wrong with tax optimization. I do think that American companies have gotten very, very good at shifting stuff over to Ireland and back or whatever. And Delaware is quite useful for that. So it's not necessarily a new world we're living in. Crypto probably allows people to be more aggressive with what they're trying to claim to start. I do think some sort of sandbox where we allow for a lot more innovation and a lot more kind of, free investment to start would be really useful, because cryptos, like, the internet or software, it's going to affect the global economy, and we should allow American companies to foster that. We shouldn't create situations where very smart, hardworking, Americans or anyone else in the world decides not to come to America to start their businesses and decide to go to Switzerland or Singapore instead. This is where you should be building your startups, in Miami or New York or Boston or Chicago or San Francisco or LA or Austin or anywhere in the US, right? Like this is kind of like where the action's been for, I don't know, 50, 60 years. And we should try to keep that lead in tech and fintech and finance and innovation. So a de minimis and some sort of sandbox, I think, make a lot of sense. And just don't let large companies kind of capture the innovation and protect monopolies that they'll never be able to build. I think every large company had designs to be some sort of crypto monopoly in their own space, and it proved to like not work out at all, because uh, that's just not how Web3 and crypto works per se. But that's what they wanted, and hopefully they've given up on that. But it's kind of very much in flux still, I think.
And what do you mean by de minimis?
So say like up to $1,000 of profits or transactions each year are completely untaxed, right? Or you can buy all the cups of coffee you want for
Hmm.
$5, up to a certain amount. Like you can't buy $10 million of cups of coffee, but if you're just going around spending Bitcoin each day, you don't have to worry about the capital gain and loss on that Bitcoin you spent for for coffee, and that would just free up the all the payments rails, and it would allow for further adoption. It would make for incredibly efficient remittance. So one really interesting thing about crypto is that now that Western Union and local money changers don't get their cut, the family that you're remitting to gets 50% or 100% more of what you send. Instead of sending $100 and they get 50, you send $100 and they get 100. And I think in poor countries that depend on remittance, that has real impact. That's going to like reduce infant mortality, increase education, reduce violence. So like that's real good stuff that you get, because you're eating into the margin of payment processors and local money changers. Because now you can pay for your rent in El Salvador in Bitcoin, and I'm assuming probably in West Africa as well. So those things are super cool. That's because there's a complete lack of regulation, but an admission that crypto has value and can be spent readily in a bunch of different places. And so the transaction costs go down and the rent seeking goes down.
One thing that still trips me up is how airdrops are taxed. And it's obviously relevant as it relates to DeFi applications that might airdrop governance tokens to users. But more recently, we're seeing things like NFT projects and DAOs airdropping tokens to stakeholders. Could you talk a little bit about that?
Yeah, it would be as if you were walking down the street and someone gave you a stock certificate for one share of Tesla and you accepted it, right? Like, so it's nothing new. It feels a little unfair, but at the same time, like, hey, it's free money, so just like pay your taxes on it. So today, say today you get $100 worth of token X, right? So that would be $100 of ordinary income today. So call it 30% taxes you owe on that. So you owe $30 on the $100 of income you made today. And especially if it's an airdrop, you probably didn't do too much work to gain it, except for stake something. And then now you hold token X, and it goes up in value over the next 6 months to $150, and then you sell it for $150. You made $50 of gains, of capital gains, in 6 months, and so that's a short-term capital gain of $50. So say you owe 25% tax on that $50, so 1250. So you've paid $30 plus 1250 of taxes, but you've pocketed what, 70 plus 3750 or something, right? So that's kind of how income tax works on airdrops. It's income at time of receipt, and then then you just treat it like a tech stock as well, because it's a token, and you have a long or short-term capital gain or loss when you sell the token.
Another new area of focus for you has to be NFTs. And, the majority of NFTs are denominated in ETH. How are taxes on NFT purchases and sales calculated? And has that been challenging for ZenLedger to support and account for these transactions, or is it pretty straightforward?
Oh, we just use the floor price because it's so rigorous and official. I'm kidding there. Like Ethereum is always has a dollar price to it. Like it's a very liquid market, so we can always price every transaction in dollars. That's pretty easy. NFTs are really cool, and I'm glad people are buying them. I think name, image, likeness for college players is going to kick off a ton more NFT usage, and that means income and capital gains for tens of thousands more individuals, if not more. And then pro athletes and around the world, I think will do the same thing. Everyone kind of wants the best and scarce moments of top athletes as they win gold medals or soccer football championships or whatever. So I think that NFTs are kind of going to explode. We'll get past the silly like this is just a JPEG. Even though we all love our memes and our even stock photography has value. I think we all admit. So that's all fine. We do support a lot of NFT stuff. We actually released our own NFT tax guide as an NFT and sold it out to the community. And so you got some unique art and you got our up-to-date tax guidance. And we worked with several lawyers and accountants that were really taking a focus on NFTs. And we can kind of link to that, I guess, later. I don't want to rattle off their names because I'll forget some of them. But Andrew Gordon and Jacob Martin are key among them. So yeah, like we're not exactly sure if an NFT needs to be taxed as a collectible, which is like a 22% tax rate, or something else. Again, there's no laws that state how we need to think about NFTs, and it is messy, but it'll start to get more and more valuable. So companies will kind of sue over NFT IP rights, and we'll get some case law in court as well, just like we had to do with the digitization of songs and movies and pirating and all of that.
Another new category that it'd be great to get your take on is DAOs. More people are working maybe part-time or even full-time in some situations for DAOs and getting compensated in an entirely new way. Have you spent a lot of time thinking about that? Is it pretty straightforward, or are there any nuanced considerations for people who are doing more work for DAOs and getting compensated for that work?
Yeah, so the DAO work I think is pretty straightforward. It's just like, hey, this one ETH is income, and it was for working for that DAO, so it goes as ordinary income. And if I just keep the ETH, then there's no capital gain. I can go stake it. There'll be capital gain, even more income on the one ETH I earned. So you can kind of stack your ETH that way or whatever, wherever the DAO is operating, which is kind of fun. But like that stuff is pretty straightforward. Like you do work, you earn something of value for that work, and then you have income tax on that. And if the thing that were compensated in has can appreciate in value, then you're going to owe some sort of capital gain. If someone paid you with a house, or someone paid you with a piece of art, or a stock certificate to a publicly traded company, it would all basically look the same too, right? You would have to price it and everything. What's really interesting with DAOs is what happens if you bought the Constitution, and like how do you value that, and how do you worry about that going forward? Thankfully, the United States does not have a wealth tax, but if you're in a country with a wealth tax and all of a sudden you own the U.S. Constitution, now you have to really think about it, and you have to worry about marking it to market quarterly or annually, and then you have to like liquidate some of your holdings to pay some of that wealth tax because you own a portion of the U.S. Constitution, but you can't sell the U.S. Constitution. So like those things get weird if there's wealth taxes, but if there are not wealth taxes, the actual admin of the DAOs themselves and the assets you're buying are a little different. If the DAOs are very active in what they're buying and selling, then again that adds to the complexity, and you really can't decentralize that. You need a centralized accountant to look at everything and clean it up and help everyone report it.
Yeah, so talk about that a little bit, because we've seen growth in investment and collector DAOs, for example. So maybe talk about collector DAOs that are buying and selling NFTs.
Yeah. Now you're getting into a little bit deeper water that I can't expound on nearly as easily. But I would say that you do like you'll have a market price for the asset you just purchased, and that will like be on the books of the DAO. There'll be a balance sheet, right? Um, Whether you have to comply with some laws or regulations and where your investors are, you'll have to value those more often or less often. And then when you dispose of them, you're going to have, a gain or a loss on that. And, do you pay corporate taxes? I don't know. Do you have everyone, like, do you dividend out to everyone? And then they have to pay a dividend or income or capital gain. Like, we'll see, right? It is a little bit murky. I'm sure there are accountants and lawyers who are very much better versed on this, but I think
Hmm.
even they would admit that like they don't really know how it's going to go. And you could just get a law tomorrow in the EU, UK, Switzerland, or the US that states something completely different, and that's the
Hmm.
new law of the land.
Got it. So in those situations, it's a little bit more case by case. I guess depending on how the DAO is structured, who's involved in the DAO, where they're based, and I guess how the DAO is like what kind of the corporate structure of the DAO may be.
Yeah, I mean, basically, you need large stakes for anyone to care, right? So you need some $100 million DAO to go buy a bunch of assets, and then they're going to take some stance like, "Hey, we're going to be incorporated in the Isle of Man, and we're not going to pay any taxes." And then some government's going to say, "Well, 70% of your members reside in our country, and we want income and capital gains. So, like, we think you're based here, and here's the lawsuit." And like that's how things are going to hash themselves out over time. But we're like years from that, I think.
I guess while we're on this topic of DAOs and NFTs, another thing that we're seeing more of is maybe DAOs issuing NFTs.
Mhm.
So how does that work? Say a DAO puts together an NFT project, sells it out, continues to make some portion of secondary sales. How does that work?
Yeah, I would say again, it's a little difficult, and so like what you're really worried about there is the income tax because someone is giving you something of value, and you're gonna, for income optimization or for tax optimization, you're gonna want the lowest price possible for that income received generally. But then when you sell it, that's maximizing the amount of capital gains. So like you're kind of you're gonna pay the taxes somewhere along the line, but you prefer
Hmm.
not to pay it up front because getting an NFT and paying taxes in cash on it makes you cash poorer than you were yesterday, though you are NFT richer. And so I think that like you need to come up with a mechanism where you're pricing these. Most of these NFTs generally have a pretty liquid and obvious price at issuance of whatever zero point 0.1 ETH or zero point 0.4 ETH or whatever. After some time, it gets a little wonkier. Like, hey, the floor price for these ones are 50 ETH because they're so rare or whatever. Okay, great. Like, I don't know about that. The IRS won't know about that. You can claim what you want, right? It depends on how conservative aggressive you want to be, and we forgot to do the tax disclaimer, but like none of this is financial or tax advice. I am not a lawyer nor an accountant, nor am I your lawyer or accountant. So just take this all with a grain of salt. But like if it's low stakes, you just own some like tiny NFT that's worth $5. Like no one's coming like to bother you about it. But if you're running a DAO like auction house and you're self dealing, selling um, NFTs to yourself for $60 million and then selling it to someone else and shifting it over to Ireland and all these things, then someone's going to start taking a closer look at you, right? So I think it's a problem for 5 or 10 very loud people on Twitter, and
Hmm.
maybe for another couple hundred, but it's not a problem for all the people kind of getting their NFT airdrops um, and just buying and selling NFTs and trading them a bit and playing in DAOs. Like try to account for this stuff. It's on chain. There's generally an on chain price for what you can have. But again, since we don't have a wealth tax, all you're really worried about is the price when it came in as income.
Hmm.
And then when you sell it, there's a market price. And that's really easy to pinpoint too. Like you know how much you sold that NFT for and you know how long you're holding it for. So you have capital gains and a holding period.
Got it. What is the most common misconception that you hear from clients as it relates to crypto taxes?
Yeah, I wouldn't say it's a misconception. I think it's actually pretty accurate. And it's that like I don't have to pay taxes because no one's looking. But I think that that's obviously going to change. Some people have gone through extraordinary lengths to move to Puerto Rico and to create Roth IRAs and corporations and all sorts of other things because they believe the tax man's coming. You don't move to Puerto Rico because you think taxes aren't happening, and you don't move to Portugal or whatever either. This is the first year, 2021. We're on your 1040 individual income tax return in the United States. The first like question you answer basically after you fill in your name and where you live is at any time during 2021 did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency. So there's a 6 year counter going there, and every year that you kind of like don't answer that question accurately, like starts the 6 year counter again. It's kind of like an Al Capone thing. It's why they went after John McAfee as well. The United States like realizes that more and more economic activity is going to move into crypto, and they don't want to just create this whole black market, gray market of untaxed, capital assets. So you're going to see more and more audits going forward, and every place in the U.S. that you can fiat on ramp, off ramp is KYC AML. So it's very hard for you to answer no on page one of your 1040 and then to also get 1099Ks from Gemini and Binance US, FTX US, Huobi US, Coinbase, and think you're going to get away with anything. And if you have significant assets or income, you're going to have a tax professional, and that tax professional is going to ask you point blank, should I check yes or no here? And it's pretty easy to see on your bank statements a wire in or out of Coinbase or Gemini or wherever also. So, like I think it's a question for 2013 Burning Man, sovereign individual, sovereign wealth, my keys, my crypto people. But the marginal customer who gets into crypto, who talks about it with friends at work, who sees NBA, NHL playoff ads or Super Bowl ads, or their favorite athlete is now talking about crypto, Steph Curry or whatever with FTX. Those people are very used to having a W-2 and they pay taxes on it, and they get a 1099B from E-Trade and they pay taxes on it, and they'll just get a 1099K or something from an exchange, and it won't occur to them that they should massively like become a federal felon by evading their taxes. They'll optimize, like some people are more aggressive than others. Some people put their minivan on their tax return or whatever. But like the next 5 million people in America that all get into crypto aren't doing it to lie about what crypto they hold. They're getting into it because they want it to appreciate in value, just like GameStop and Sheeb and Doge. They're buying it because they think it's an asset with alpha, not because they think it's a great money laundering implement.
So you touched upon this a couple of times, but you are wrapping up your next raise. Tell us a little bit about what's next for ZenLedger. What are you excited about that you're working on?
Yeah. So thankfully the round was oversubscribed, so we got to make sure that all the investors were a great fit, and that's what we were able to do through seed and Series A as well. Our investors have been really helpful and fantastic. But so like I think that the next things we'll do are expand internationally, because a lot of these investors are actually based overseas and can help us enter additional markets in Europe, MENA, South Asia, East Asia, because there's just so much activity happening there, and other countries kind of realize they need to tax stuff too. They look at the US and EU to take the lead, or barring that, they look for ways to arbitrage that regulatory difference, like an Estonia or a Switzerland or a Singapore might do. So we are looking to expand internationally in scope. We will be offering portfolio tracking, and so we're kind of doing some product innovation as well. So those are the big things we're doing. We've grown from 15 people to 45 people in about 9 months. Me personally, as a CEO, I didn't know if I could hire a C-suite, which is what Series B requires, but we've actually just made fantastic hires at CTO, COO, CFO, and Chief Strategy Officer. So we'll be announcing those hires soon as well, and so the team will probably be growing to 75 or 100 people.
That's awesome. Well, congratulations on all of that. It is clearly a testament to all the traction you're seeing and the business that you've built. So very excited to hear that. And then I guess last question, just putting aside ZenLedger and taxes, what are you personally most excited about in crypto and Web3?
Yeah, I mean, I think that we're getting better with the kludginess. Like, I still, if I'm doing a bunch of DeFi stuff on one chain and I leave for a month, it's all changed when I come back and I have to watch new YouTube videos. And then, like, I forget that I need gas in one token, and then I need to, unstake in another one and go over here and wrap it. And like, it's awful, right? Like, all of it's so terrible, just trying to get high APY on it and mess around. I do think that NFTs are much more accessible. And if you start wrapping DeFi in NFTs, that'll be interesting. Like, you just have someone else take care of all the DeFi stuff, and you get a claim to it by purchasing that NFT. And you're jumping in whatever Discord, or hopefully whatever displaces Discord, because again, Discord is kludgy and horrible as well. Like, we're still like in a transition from Web 1 to Web 3. There's a lot of Web 2 stuff that we just skipped over, and like, Craigslist is still the best thing out there, and all it did was replace local newspaper wanted ads, and it's still like by far the highest utility of anything on the internet, which is hilarious. And we still haven't figured out payments at all, right? Like, we talk about Elon Musk and Peter Thiel and PayPal, and we're still don't have payments down. So I think we're just still so early, and there's still so much innovation. I think name, image, likeness, and NFTs is going to be really cool, because you're going to get all these fantastic athletes as champions for crypto, and that's what we do, right? We pick people who are objectively world class in what they're doing, generally sports, because you can run the race the fastest, you can win the championship, and there's not much arguing about it. And those people are going to say, like, hey, buy my jersey, or show up to my jersey signing, or get my exclusive trading card here via NFT. And artists can do the same things. Wu-Tang Clan made a one-off album that is now owned by Pleaser DAO, which is fantastic, because Martin Shkreli never deserved to own it. So like, there's just a lot of cool things that are happening with ownership and like transportability of this value that I think is super cool.
That's great. Well, I will link the NFT tax guide that you mentioned, but what is the best way for listeners to follow what you're doing, to use ZenLedger, and yeah, give us that as a quick last answer.
Yeah, sure thing. So just go to zenledger.io, ZenLedger.io, and just get started there with taxes. We have a bunch of Crypto 101 stuff. We have great customer success people standing by. Please, leave us alone till after April 18th and give us a little bit of a break, but we're happy to help you afterward. You can find me on Twitter at Patrick Larsen, Larsen, and our company at ZenLedger.io. But just, ping us anytime with any questions. We're always happy to help. A lot of stuff is super esoteric, and you just kind of need software to take care of it for you. And we're happy to help.
Awesome. Thank you so much, Pat. This, I think, will be perfect timing, because we're just coming up on the first deadline.
Yeah, I expect most people that have been in the crypto game are going to file their extension. So just keep us in mind in August, September, October, and we'll, hit us up in July and August, please, so that we can take care of you early on, and you have less stress, and we have less of a traffic jam trying to get these filings done. But happy to help everyone out.
Yeah, we'll definitely bump the episode when that time comes around.
Thanks so much, Ria. It was really fun chatting with you.
This was great. Thanks, Pat.
Listen.